All right, my beautiful friends. It's still Thursday, March 28th, 2019. At least I think so. Look, another off the Richter scale volatile day. On Saturday when I did my markets a look ahead segment, I said this week would be volatile, but I had no idea it would be this volatile. I mean, I got shaken out of my trade, as you all know now. This is just craziness. But I want to put a perspective on what's going on here. It's pretty obvious to me. I'm going to lay this out here, and I want to hear from you. So, over the past few days, and I've outlined this, I've actually read it to you straight off of the articles, we're getting almost what seems like an incredible amount of bad economic news. It just doesn't stop. Despite this, stocks keep going up. And it's very simple for me, and I think for you too, to understand what's being set up here. The market, here's what the market is doing. It's very simple. Pricing in a Fed rate cut. That's why stocks are going up despite everything else. Look, the distortion between the economy and the stock market continues to get greater and greater and greater and greater. This gap is going to get filled at one point, but who knows how big it's going to get. Obviously, it's going to get a lot bigger. Now, I mean, even today, you got a lot of people trying to downplay the yield curve. Ignore the yield curve. It's not telling us anything. You really, when I hear this kind of stuff, I want to flip out. I really do, because it's the same kind of things we heard last time. But I will give these people this. Where we are right now, this market, we've never been here before. And it's managed. We know that. There's no resemblance whatsoever of a real free market anymore. Just like you would see in a managed economy. That's what we have here in the United States. So that's what the market's doing. And it seems that every time we get another hit of bad economic news, stocks just want to go up. And that's simply because a rate cut is being priced into the market. Now it's not just a matter anymore of if. It is going to happen. The only question is how much is the Fed going to cut? And this is what I'm going to say here right now. As you all know, I am the best, bar none, Fed caller out here. Mainstream media, YouTube, no one gets it better than me. I'm telling you right here and right now, the next move for the Fed is a cut. Just a question of how much it's being priced into the market. If there were not a cut next Fed meeting, this market will drop. And I mean drop hard, because it's being priced in. And that's why we're seeing all this. That's why we're, every single round of bad economic news, no matter how bad it is, keeps pushing the stock market up. The Fed is the lender of last resort. And with that in mind, in the abstract, I can see why the yield curve, the action that we're seeing right now, is not like it's ever been before. And I think, at least at this point, we're going to continue to see the yield curve invert, but stocks are going to deviate higher, and that's only because, yet again, a Fed rate cut is their next move. There is no doubt in my mind whatsoever at this point. So anyway, I think this makes the most sense at this particular time, and I would love to hear from you. What do you think about this? I doubt very, very much that I am wrong on with regard to this. Anyway, with that said, love you all. See you in the morning, and it's just going to be another freak show. Bye.